This is Weekend Stock Talk on July 29th. Welcome everyone, whether you're watching from Facebook or from YouTube. This is the weekend edition, and we are going to be looking at a ton of trends, a ton of tickers, and we're going to be starting with SPY, the S&P 500. Now, remember from our previous videos, and this is the good thing about videos that are posted on YouTube, is that you guys can revisit those videos should you see certain patterns or trends that I was talking about. We know there's a resistance at 284, rather strong resistance, hence it's a blue line here, right? And the resistance is, you guys can imagine that we tested a couple of times and then we got rejected, and we actually ended up falling quite dramatically on Friday. So looking at intraday patterns on SPY, you guys can see that this was a steady decline. This blue line, guys, this blue line has not changed. I don't change these lines unless I specifically tell you, oh, I'm going to move it up or down. I don't change it while you guys are doing other things. So I only change it during our videos, and you guys can see how we kind of just get rejected. Now, we're coming back down to a near-term support around 280.50 to 280.70. So recall from previous videos, we said that when we're near the resistance, it was a good time to take the profit. Actually, it would have been a good idea to do that. But now you guys can see that we came down. And the interesting thing is, on the 180-day chart, you guys can see the 20 EMA line finally pointing downwards, and that we've had a bullish streak of quite some time. So now we finally fell, and we really closed under the 20 EMA line, which is actually a pretty big concern for me. Even though we're at the near-term support, this doesn't seem very definitive. And now you guys might be asking, well, Kevin, how come we didn't fall all the way back to your white line down here? Isn't this a support area? And certainly that is a support area around 279.16, around that area. However, you guys have to know that markets doesn't have to come down all in one swipe. And you guys can imagine, looking at the 180-day chart, you guys can see that we came down pretty much only one swipe here, but that was because that was the first time we had a major correction. The market got a major scare, hence we got heavy volume selling. But in this case, we were at the top. We did have higher volume than before. You guys can see that slightly higher volume than before. However, since we were near the peak, you guys can see we fell to this near-term support. So what am I expecting for the near future? I expect this actually to continue dropping. So you guys can imagine we went sideways for the last 4 hours. Completely normal, I think. If we go sideways, we're just burning off time between hit the 20 EMA and for a possible another leg down to which area? 279.12. Now, if that area doesn't, hold, it just depends on intraday how we get to that area. Then there's a possible move lower. Now, where can we go lower? I'm going to take you guys. So first, I'm going to show you guys on the 180-day chart these simple moving averages that are converging between each other. Surely, around 277.24, that area could act as a support again. And then if that area doesn't hold, and if we continue to drop with heavy volume, then the long-term bullish support has to be at 273.83. That is where our support areas are. We have a couple of them. This one not that strong, this one slightly stronger, this one is average, but this one is possibly the strongest support. Doesn't mean we are going to go all the way down, but there's a good possibility that we'll continue going down. Now, another side is, well, how do you know that it's not going to reverse and just go straight back up? And certainly that is one possibility if it just starts reversing through this candle and moving back higher. But is that a likely scenario to play out? And the answer is no in that case. TVIX, looking at volatility. So volatility, you guys can see that we've been going down, getting rejected the 20 EMA, found a base support at 35.44, and that was why. Well, SPY was at resistance, volatility was at support. Pretty reasonable to assume that people didn't really want to sell on volatility, given that we were at that area. So you guys can see that we popped over the 20 EMA, and then now the only thing we kind of want to do is can we keep above this area? And surely as if markets continue to drop, then we do see volatility continuing to move higher. /CL, tracking commodities. And before I do crude oil, I want to thank everyone for watching these videos. If you guys do like these videos, please hit that like button and subscribe to this channel. And yeah, it is you guys who make the channel possible. And of course, all of these trends and intraday plays, possible day trades, you know, how I observe certain movements, I only give you guys kind of bits and pieces of what I'm thinking, but in the course that I'm developing, it will have the entire picture laid out step by step of how I go about analyzing these, especially these specific lines. You know, one can argue like these lines are very important because why? Because those are support resistance lines. If you just miss it by $1 or $2, then chances are you're not going to find the best entry or exit points, and therefore, you know, that risk increases if you don't put the right projections down, technical projections down. So anywho, looking at the 1 year, 1 day chart. So what do we see? Well, you guys can see we talked about a possible crude oil rejection at the 20 EMA, or at some point a bear flag formation. And I'm going to draw this for you guys again. This is a bear flag formation. Can you guys see that? For another possible leg down. Now the leg down would be, the support would be around 66.13. Have we gotten that leg down yet? Not yet. Can we get the leg down? Sure. So we actually tried to go that leg down actually intraday on Friday. Can you guys see this? We tried to move down, but we managed to kind of slightly recover. Recover to where? To the breakdown candle area. Can you guys see that? Is that unusual? No. But, you know, the one thing that is interesting is crude oil did attempt to recover, but surely we can expect, and you know, this is one where, are you going to force yourself to make a trade on crude oil? And you really don't have to in this case, right? Why would you want to force yourself to take a trade, especially when the risk of falling is great right now? And therefore, this is one I'm watching. If it gets down here, this could be a possible buy area for crude oil. But until then, let's just wait and see. /NG, natural gas. So natural gas looking very promising now. And let's take you to the 180-day chart. You guys can see that we've reestablished the support at 2.713. We've reconfirmed the 20 EMA as a possible support, which was what I was looking for. And there you go. There's the bounce we're looking for. Natural gas looks pretty darn bullish right now. As a matter of fact, I can argue that UGAZ, which follows natural gas, should be looking very enticing. And this certainly is looking very enticing. Here's UGAZ. Here's the resistance at 59.57. It's really not that strong of a resistance in my opinion, but if you guys can imagine, if we just kind of edge down a little bit, you can imagine that this could be a good entry point into UGAZ. At the very least, you should identify your stop loss, but this is a reversal pattern. And this is what we were waiting for in terms of natural gas. Looking good, natural gas. Good job. /GC gold futures. So gold futures, we have a support at 1210, which we've identified in the past, and that we have a resistance at 1240. Now, we talked about this horizontal consolidation pattern, which has happened in the past, right? We've seen this in the past. Let me show you guys the 1 year, 1 day chart, and you guys can see that we've consolidated sideways in the past, and right now we're really consolidating to the past. Until where? Until we kind of hit the 20 EMA line, we might test the resistance again, and then what's going to happen to gold? Well, who knows? Chances are, if I just look at this trend, I'm going to say that it's going to go down, right? Because, you know, we've gone down continuously. Why go against the trend? Remember, the trend is your friend, okay? Until the end. So, anywho, go horizontal to the right and then fall down, right? But at the very least, we do know that this is a strong support. So whether it does a double bottom or whether it reverses, goes back up, it doesn't really matter to us because we just want this to play out. Right now, it's not showing any sign of reversal, and therefore, you know, we just wait and see. We don't have to force a trade, and certainly do not force a trade if you're not comfortable making it. All right, let's take a look at a couple of tickers. So the first one that we're going to be looking at is BILI, and this is requested by someone on Facebook. So thank you for your comment. And he gave a very lengthy explanation of why he got into the position and you know, why he's, I think you're thinking about selling the position as well. So very astute observations in terms of the comments that you made, and keep that coming, right? When you buy and sell, you have to give me reasons why you want to buy and sell. You can't just say, oh, you know, we're going down and it's a good time to buy. That's just not enough information. Okay, so Here we go. Here's the support, near-term support, 1265, and this is BILI. And the one thing that I really don't like about this pattern is, even though it kind of looks like IQ, the thing is it retraced back too much. You guys can see that it went up significantly, and now it retraced back pretty much to the first area when we started gapping up and moving higher, breaking higher. And you can imagine now we're breaking below the support. That's not good, because this is almost a signal, if you can imagine, of a long-term reversal back to the bottom. You can imagine that this could land at 1048 and could even break that major support if it wanted to. Sure, it can do another, run up, but do we see any confirmation of reversal? And the answer is really no. And therefore, this is not a trade that, you guys can see that, right? This is not a trade that is looking good at all. So, yep. Okay, yeah, so just, be careful on this one if you are in BILI, even though it's been dropping. So thank you for your comment. All right, Kim. Yeah, so let's take a look at FNKO. FNKO, this is one where you guys can see, we've had a massive upstreak. This is a good trend. I like uptrending patterns. That, remember, the one thing that is, things that go up must come down. Have we come down yet? Really, no, right? We've came down a little bit from the peak, but we're still significantly overextended. Our MACD indicators are showing that we're about to converge, and therefore this is almost looking like a sell signal, right? Surely you guys can imagine that we can retest the 20 EMA. That's an easy 5% drop. That is very easy to see. Can I see it come up? It can. It's just less likely. And if it goes up, great. Why am I going to participate it? It doesn't matter. I don't want to catch this because it's been so overextended. So where is our possible buying areas? Well, our buying areas really has to be if it consolidates right for a long time, and at the very least consolidate, wait for the 20 EMA to catch with us, then that could be a buy area. Or if it drops to the 50 period moving average, which is down here, that could be another buying area. But until then, this is way overextended. It really needs to rest given its massive run that it's done this year. Yeah, there you go. Gee, AMD, do you think it is a good point to buy AMD, or should I cash in based off of today's performance? So, so one thing for AMD is, yes, we've got that push, right? You guys can see that earnings push. And now I want to take you guys to the 20-year chart just to look at, first of all, I drew in this lower high, but you guys can see that there's a resistance at around 2051. Now, does it have to hit this resistance? Really doesn't, but it could, certainly. But the one thing that's a little concerning to me is you guys can see that, look at this. Up, and then we kind of made like a kind of a flat candle. That doesn't really matter too much, but at the very least, what can we see objectively speaking? Objectively speaking, AMD is way overextended. I know I said this before earnings. I know I said this after earnings, but really, this is really overextended, and the probability of it coming down is just higher, in my opinion, than for you to make money, right? Sure, AMD has the potential to continue gapping higher. I know we're on a breakout trajectory from a bull flag pattern. You guys can see on the weekly chart that, of course, it looks very promising. But the one thing is just we're so high up. Again, I mean, it's just, how do you know when to get out? In that case, if you're already in it and you've already taken advantage, this could be a good time, right? You can preserve your profits at the very least, and if it goes higher, just watch and see, because chances are there's going to be a point in time, in my opinion, in that it's going to come down back to the 20 EMA below your sell price, in which you can get a better deal. But that's just my opinion. So there you go. FCX. Okay. FCX. So FCX is on the near term. You guys can see that it's been making pretty nice support areas over here. Pretty nice support. But the one thing, this is an okay pattern. This is an average pattern, I think, because yes, it is a higher low, but you guys can see that we've held a support around 1544 in this area. And I know this kind of looks like a bull flag pattern in the making. This could be a bull flag pattern. It's it's okay. If you wanted to take a trade, I think you could if you really wanted, if you really believed in the fundamentals of this stock or company. But yeah, you could, but you just have to pinpoint your stop loss, right? You have to know where your stop loss is, and there's a potential for it to go higher, but the question is it going to break out of its bull flag trajectory? Because you can imagine if this continues on lower, it doesn't break out, that doesn't mean anything. In that case, that's just a declining pattern. So yeah, just allocate your risk efficiently on this one. Okay, GOOG Google. Rizwan, Kevin, ticker Google on the weekly chart got little more room to pop up. Thank you for the videos. You're welcome. You're welcome. So, that looks interesting. So, yeah, so the one thing you guys can see that, sure, there's potential for it to continue higher, but look at the gap area that was made between, because this is the earnings, right, between 12.15 and 12.42. So remember, when there's a gap area, usually the markets will possibly come down and kind of retest this gap area. So we would want to wait on this, in my opinion. This is a little overextended, given that markets has another potential to come down. You know, you can expect Google to continue kind of edging downwards, at the very least to the 20 EMA, I think. So I would wait on this one. If you're in Google, you know, this is another chance where, you know, you can imagine could be close time to sell. I mean, sure, it can move higher, maybe 2 percentage points, maybe even 4 percentage points, but this is one where if markets are kind of edging downwards, and you know, we would expect Google just to kind of sell off a little bit too. GOOS. This is by Chris. May we visit GOOS? Whoa. Okay, so hold on. Let's take a look at the. Whoa. So this is yet another one that's been, you know, going high significantly. We even gapped up this due to earnings. It seems like, wow, that was 25 percentage points. And then all of a sudden now we're kind of edging downwards. So surely you guys can see, similar to the previous pattern, we did make a gap in this area. So because this is so overextended, this one has quite a bit of room to fall. If it wanted to fall, it could fall quite easily. If it wanted to go up, we've got to get the bulls in there, and the bulls. I don't know if the bulls will actually buy in this area, in this territory. So you guys can see we're actually edging below the 20 EMA. So pretty dangerous sign for this one. Rizwan, small videos on how to buy pre-market and how to look at aftermarket. Yeah, so that is in the course, taught in the course, how to look at pre-market and aftermarket trends. So yeah, we'll keep it those for those who are enrolled in the course. Thanks for your comment. And Dozy, thank you for your comment. I didn't get a haircut, but, you know, I like it. Rico, great job on your buy on AMD a couple of days ago. John, let's take a look at DHR. Ooh, okay, I see. Okay, so DHR is one that is on an uptrend. You guys can see this uptrend. Now, another thing you guys can imagine is it's not that predictable. This pattern doesn't look too predictable. Right now, we're kind of overextended. Sure, there's a potential for it to start going higher. You guys can see that it did consolidate for a while, which is, you know, obviously pretty nice. It could have the potential to go higher, but the one thing is you guys can see that we pulled a candle up here, kind of pulled all the way down. You guys have to question, why did we pull down? Now we did go higher, but once again, you guys need to pay attention that we do have a resistance at 104.30. So, you know, if you bought it now, ask yourself, you know, what's your potential for profit? If you're, you know, what's the best time to buy in? Well, I think in my opinion, best time to buy in would be probably a dip to the around the 95, 96, 97 area. I think that would be a better time. Right now is just, you know, it could break out. It doesn't have to. And therefore, your margin for profit is a little bit less. All right, then, thank you for that comment about LRCX and UCTT. I was wondering, you know, what's going on there. And K9, all right. So it's good to see a lot of old faces here. I think you guys consistently watch my videos and post your comments. That's fantastic. Now, if you guys are new here, you guys can post comments too. I'll be happy to look at them as well. So here's a WM, or whoa, waste management, and here we go. So I haven't really, wow. Okay, so this is it has to be based off of earnings, right? What is going on here? Yeah, here we go. Earnings report up, 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 up. Okay, so this is obviously a very good sign for this, because this looks like a breakout trajectory off of the bull flag pattern that really didn't get that much time to form. You guys can imagine this was just half a year, and now it is going high, high, high. That is incredible. Actually, okay, so the one thing is, you guys have to know that, okay, we closed pretty nice. We put pretty nice, but we closed right at the resistance area. So that's the first thing you have to notice. We're right at the resistance on the weekly candle chart. So there's a possibility for it to come down. And now the thing is, if we start breaking up and reconfirming this $90 as a support, then we can say, okay, that's a good time that we could possibly look for entry position, especially if it starts consolidating at that area. Now, if it gets rejected, obviously we would want to see, a bounce somewhere into the 20 EMA line. But this is a good sign for waste management. I like it. Good one to look at, K9. Yeah, and that's it for this video. How'd you like this video? Hopefully you liked it. If you did, hit that thumbs up button, please. If you didn't, it's perfectly fine. We like our own things. We don't like some things, and you don't have to like everything. But thank you for watching all of my videos regardless. And I will see you guys tomorrow for a stock talk. Pay attention to the futures tonight. We'll see what the markets do. This might be just a semi-correction, which is much needed in my opinion, given that bullish run that we've had for a long stretch of time. So I'll see you guys tomorrow, and happy trading.